today was a really good example of, particularly in the NQ, of the difference between the Open 5A and what's happening since then, which could be the Open 5B, depending. Whereas, we definitely got that over here. Big time. This was not a clean Open 5A at all. It was really hard to trade. I picked off a couple of ticks on the short, and then it just rode along the low, and then it drifted back up. This is just really nothing. And then boom, that is a perfect example of why the Open 5B works. It's a retest of the Open 5A and often attracts volume, as you can see here. So we'll talk about that in setups today, but that's a very good point, Tom, and it is a correct point. And I have to share this with you. This is one of the things that's really useful for everyone to hear, because particularly those of you in the boot camp, so I've been teaching trading for a long time. I had a group like this back in 1999 called Dr. Jeff's Day Trade Clinic, and a couple hundred people went through that, 50 at a time. And so I've got some experience with how to teach this and different things that work and don't work. And one of the things we did in the workshop last fall, which was 3 months of setups, we've since compressed that. I started, in those days, I only had the Open 5. I hadn't broken it into an A and a B. And in the process of teaching it in 2019 in the fall, particularly with the help of Darren Park, just asking lots of really incisive questions, I figured out that the Open 5 is really two different trades, and they're both very closely related, but they work completely differently. So that's when we change that to an Open 5A and an Open 5B. And I'm telling you this story because this is a really, really clear and important example of how teaching something makes the teacher better at it, and the students learn too. And so a really good instructor and good engaged students will produce a result like that, and that's the gestalt. That's what TRG is all about. That example is one of the reasons we founded TRG, Lee and I, because we saw that happening and said, God, he's right, and that worked. And so anyway, we're going to talk about that today, but that's just a perfect example of why Lee and I teach and why this process is so valuable, both for you guys and for us. So anyway, let's see. There's some other comment going on about the challenge in the Slack. I'll just let that go, and you guys can keep talking. I won't comment on it. Yes, it does, Tom, about the limit orders in Open 5A, and we'll talk about that too. And a lot of these questions are also instrument dependent. And that's something I plan to cover in this session as well. Now, I have to also preface with the following. Those of you that are either in this current boot camp or from the last boot camp, we did not do any setup conversation at all in the last boot camp intentionally. And in this one, we're just introducing it as guests in a TRG session because it's early for you boot campers to get really detailed about setups. You need to really focus on understanding price action and structure first, and then the setups will naturally come. But we also wanted to give you guys a chance to start understanding it. So in this boot camp, we decided that we would do this TRG session and invite you guys along. So I'm saying all that because I want to encourage you to ask questions, and I want to tell you there's no such thing as a stupid question in this session. There is a chance if you ask a question that I will tell you that it's either too low or too high level for the conversation. And I'll either say, let's take that offline, or I'll just say, let's not discuss it. And I will do that if it's too far advanced or if it's too simple. So we're going to try to stay on a compromise of those two things that hopefully covers all the different experience levels and knowledge levels that we have in the room. Okay, the other thing that I'm going to do this is, as much fun as it is to watch our domes in Jigsaw, I'm just going to, they're still running, but I've just minimized them. And that way we can kind of stay focused on what we're talking about, which is this document. And although I don't want this side over here to be here, so hang on a second. Oh, having 38-inch QHD is fun, but it takes a little while to get used to the proportions again after not having it. And that's what I wanted to do. Okay, so and we'll talk mostly on the small 1 minute and whatnot charts for these discussions anyway. So when we're doing that, I will either blow these guys all the way up so we can see them, or I'll try to fit them into the side next to this document. Okay, so that's rules of engagement. Feel free to ask anything. Again, if you're boot camp, I may tell you that it's just you're not there yet, but I'll try to explain it anyway. The other thing that I want to preface everybody understanding here is that there's a lot of layers of knowledge in these points on this document. Like, to me, the word weight structure is very significant, and it means something. And it means something very clear, and I know exactly what it is. You guys don't have that benefit because you haven't heard it a lot, and you're not that, it's not repetitively reinforced. And if you're in the boot camp, you haven't really heard it at all, except maybe in passing in the sessions. So I'm going to try to reinforce what the points mean and along the way, but I really want you to understand that every single word in this box that has all the setups in it is important and has been vetted over decades. So I didn't arrive at these criteria just randomly or last week or this morning before I presented this. One of the things that I did in the workshop in 2019 is I actually showed some of the genesis of this, like the version of it that I used in 2013 and stuff like that. And those videos are in the library in TRG if you guys want to go back and watch them. But your process is about you, and it has to work around how you work. This one is about me and how I work. So, it's not intended for you to just take it and do it. It's intended for you to take it and make it work your way. But an important criterion with that is don't just take it and say, well, Jeff does the open 5, in 5 minutes, I'm going to do an open 10. That's not what I mean about making it your way. I mean, the open 5 is a certain personality type of trade. You have to just do it and not think and yada, yada, yada. Some people don't trade that way. Some people want to really ponder their trades, and those are weight structure trades. So those setups will be more toward you. But I don't mean make them your own by changing them, because they all work. So again, really important to just try really hard to ignore your desire to tweak things and use different parameters and settings, because that just doesn't make sense from a thinking in bets point of view. Okay. All right. So that's kind of the broad strokes of this session. I'm gonna, there's so much detail here. We could do this for 4 or 5 hours and not cover 10% of it. So I'm going to go through it at a reasonably fast pace with the idea that I want to try to cover all of it at least on a cursory level. And then we'll go back and try to talk about whatever level of detail we have time for. But again, having said that, I don't want to lose anybody along the way. So if you're totally stuck, stop me and we will discuss a point in detail if we need to. I do recognize that this particular conversation, that might be necessary. All right, so that's the rules. That's the story. That's what we're going to do today. This is going to go probably 2 hours at least, or an hour and a half for sure. I'll go as long as everyone wants to. We'll take a break in the middle so you can manage your bathroom and coffee and whatnot. And that's that. So let's get busy. First of all, again, I just have to preface this that I have tested and continue to test constantly hundreds of different things. That's what I do. That's my game. I'm constantly looking at things that I'm thinking I'm seeing or that I am seeing, and I have this enormous database of things I've tried. I mean, hundreds of thousands of examples of different setups. And so the things that are here work. And they work the way that I'm going to explain them. So I'm just prefacing that. Again, there's a lot of possible ways you could go from here, but the best advice Lee and I can give you, and you've heard it over and over again, is, if you can do the Open 5A with a 1 lot and routinely make money, then you should be doing the Open 5A with a 10 lot. You shouldn't be off trying to figure out another setup. That's the right approach to setups. Okay. Let's start them. First of all, a little bit of language. I want to just talk about the columns here and what they mean pertaining to the setups. And I should try to turn the spotlight on here. There it is. Okay. Oh, that's so true. What Tom just said, Bruce Lee's comment about, 1,000 kicks. If you haven't heard that before, basically in a nutshell, he does not want to fight someone that knows 1,000 different kicks or has practiced 1,000 different kicks. That's not scary. What's scary is the guy that's practiced one kick 10,000 times. That's scary because he's going to be able to execute that kick. Okay, so that's this. That is exactly this. So let's talk about the columns. First column over here is the opportunity. That's the name of the setup, and that's how we will refer to them. There is some nomenclature in here that I will need to explain, and I will when we get to it. The price action column is referring to the price action up here that we've talked about for months, or if you're in the boot camp for weeks. And those are just abbreviated here. So EF is ebb and flow, PD is price discovery, high momentum is HM. You can see the legend there. If it says something with a slash, like HMPD, that means you can trade this particular setup with either of those. So slash means or. If you're familiar with Boolean logic, that is a convention. Okay, if there's an arrow like there is here, that means that you're looking for a transition from one type of price action to the other. So in this particular instance, this setup occurs where ebb and flow becomes high momentum, typically. Okay, and again, slash, so this is or. And then I have any there, meaning the price action isn't relevant to this particular setup. Okay. Column here, mode. Okay, this is something that I developed about 7 years ago. It's relatively new in this model. Most of the stuff in this model is 30, 40 years old, or at least 20. The mode thing I added when I was teaching somebody, it was like 2010 we started working together. It was a guy I knew from Microsoft in Colorado, and we have very different personalities. He was a professional, or not a professional, but he was an amateur bodybuilder and trainer and programmer and kind of an interesting person with a lot of weird quirks. And one day we were just staring at a computer talking about trading setups, and he just blurted this out. And here's how it came. I was like, so, here I'm scalping. I was showing him something I was doing. And then here, I'm still thinking about scalping, but I need to wait a little bit. He said, well, then you're not scalping. And I was like, you're right. So I said, well, what should I call that? He said, well, you just said wait, so maybe you should call it wait. And so I started doing that, and it made total sense because it was just a different psychology. And then since Lee and I started working together, I've modified that to wait structure, because those setups are really about structure in the market more than they are about price action, which is why we need to wait a little more, because they tend to unfold a little slower, but predictably, and that's why that's an important criterion. So that's how this column got added. I realized that some setups you have to be thinking differently than others, and I needed a way to switch my brain back and forth. So it was mode, and it's scalper wait. Weight has been modified to structure. I literally have a 3x5 card on my desk. I'm holding it right now as we speak, and it has scalp on one side of it, and it has weight on the other side of it. And you can hear me. That's my 3x5. I flip this thing over. It is in my hand when I'm trading. It is that important that you keep your brain focused on whether you're just doing really fast execution or you're waiting for something to happen, because those are two totally different parts of your brain. And it took me a while to learn that and figure that out. So that's an important thing for you guys to assimilate. Resistance is futile. Okay, the next column, TOD, time of day. And by the way, I purposely am not doing any slides or anything or printed notes on my screen. I'm not going to make you a PowerPoint. You're all adult students here. You can take notes, and I expect you to, because this is the kind of presentation you need to take notes. There's a lot of detail here, and just listening to it over and over again is not going to do it. You need to burn it into your head, okay? So keep that in mind. Time of day, conditions to watch for, avoid. So this is the first level of screening criteria for each setup. There are keys to doing it right. There are notes, which are kind of footnotes, right? So this is a hierarchy starting in this column here of importance. And that column is the most important stuff. So that's the first thing we need to do. If we get past that column, then we come over here and we say, okay, this is how you do it right. And then this is the stuff you keep in mind along the way. So that's how this breaks up. So let's start over here with the yellow, which are the conditions and the time of day. Because time of day is critical. If it's the wrong time of day, you don't do the setup. End of conversation. And it just, that's a binary. A binary is on or off, 0 or 1. You do it or you do not do it. That's why they're here. So the open 5A occurs in the first 5 minutes of regular trading hours. That's what RTH is. Opening range 5. So you do not trade this. You sit on your hands if it is not clearly one-sided. That's it. Over. If you do not have that, you do not take this setup. What does clearly one-sided look like? That's what clearly one-sided looks like. The NQ was a perfect open 5A long. It tried to go down. It couldn't. The delta was overwhelmingly on the other side, and that pushed it up. The open 5A ended right here, but this trade continued, and it was a really nice momentum trade. We'll talk more about that in a minute. Okay. On the other hand, this is what the ES looked like in the open 5. And remember, the 5 minutes ends right there, okay? So this was a short in the open 5. It was not a very good one, but it was telegraphed by the heavy volume that was on the downside right at the open. And then what happened was, it got sold for a while until the sellers just couldn't push it down further. And so that's how we created the range. Now, this was a really good trade, but this was not an open 5A. That was an open 5B because it's at 656. And remember, the open 5A is only the first 5 minutes, okay? Then any retests of that level are what is the open 5B. And that's why that was such a clever enhancement to that setup that we added with the help of Darren back in last fall. Okay, so you weren't here, Darren, when I introduced this. I see you're here now. What I'm referring to there is a conversation between you and I that actually was the genesis of the Open 5B, because if you recall in the workshop in 2019, it was just called the Open 5. And you said, wait a minute, there's really 2 different trades there. And I said, you know what? He's right. So here we are. All right. So again, the yellow column is the time of day, and that's an absolute. It's a binary. You don't do this any other time, and then any other conditions. So for example, HMOMO, that can occur at any time of the day, and it can occur unexpectedly. A lot of times a news event or anything outside the market will trigger an HMOMO, and that's why it can occur unexpectedly. And you got to be ready for that, because that is a huge opportunity if you know how to play it. Okay, so that's what this column is. I'm not going to read through all these right now. We'll do that when we get to the individual setups, which we're going to do. But let's just stay with the columns. The next column, again, the first test is the yellow. If it has to do whatever the yellow says, or you don't go to the cyan column, okay, or blue, whatever you want to call this. If it does pass the test, so let's say you have one-sided momentum in the first opening 5 of regular trading hours, then you can come over here and you can say, is it overwhelming in one way? And I use 10 to 15 second bars to see that overwhelmingness. And again, here's a really good example on NQ this morning. If you look, see, and this is what was so tricky about this in this morning, and this is typical of NQ. It does this a lot in the open 5, whereas ES is a lot more, behaves a lot more orderly is the right way to put it. So again, let's peg where the open 5 ends. It ends right there, okay? So the key to this particular one is that not that there was an overwhelming direction, but there was overwhelming momentum. And remember, that's the word that I'm using on this setup. Let's bring that back up, okay? If it's clearly one-sided momentum, that's what matters. It's the momentum you're playing here. This trade is all about it. That's why highlighted in blue, go with momentum. Watch high volume nodes for possible inflection. So let's rip that apart looking at the NQ, okay? If you were purely looking at this like this, okay, let's look at it as it unfolded in 10-second views, okay? Remember, there's often a head fake in this trade, and I'll talk more about that in a second, but there's where we opened right there, okay? So let's just kind of, you know, scroll along here. That was the first energy of the open right there. And we'll contrast that with what happened in the ES in a second. But that right there is my clue that this is either a long or it's nothing. And it could be a head fake, but if it's going to be a head fake, somebody has to come on the other side of this range and sell it really hard, okay? Otherwise, you know, this momentum is pretty good. I mean, that's 100 lot of delta on the buy side, right on the open. Okay, so then it comes back the other way. So at this point, you don't have a decision. Okay, and remember, these are 10 seconds. So you're 20 seconds into the market now. There's no trade here yet, okay? Next bar. That's a lot of downside momentum. A rookie open 5 trader would get short here. A good NQ open 5 trader would look at this and say, yeah, but look what happened. Look at this wick. It sold, but it was exactly like that. That was 100 up, that was 100 down, and it didn't take out the price. It held. Okay, that's really important when you're doing this trade because you're watching a combination of momentum and the price. That's all that matters. So right now you have a stalemate, but there's a really good argument that the low isn't going to get taken out. You can't say that about the high yet. Okay, this is not conclusive. That is, okay, if this doesn't break down, I might want to buy that right there. That's what I'm thinking. Okay, so now let's look at the next bar. That reinforces the decision that I just said I made. This is a long unless it proves otherwise because it's defending that so aggressively. Okay, at this point in NQ, I would be long. I would not in ES. And I'll talk about those subtleties later. I'm just trying to give you a sense for the trade, okay? So at this point, I'm long with a tight stop below it because the chance that this is going to just take off in the north direction is pretty good. And if it breaks down, it's easy to get out of because it's tried 3 times already. I'll probably have plenty of opportunity to do that with hitting the flat. I don't even have to really worry about a stop there yet. So let's say I'm entering this and I'm thinking, all right, it's 7-11. Let's nibble here, okay? That happened next. Now we're at 20, okay? So we have 9 ticks already. This is how an open 5 works. Remember, you can't hesitate. So I got long right there and just said, you know what? I've got nothing to lose. It's asymmetric. It looks like it wants to blow to the north. Another clue here was that was 2K, this was 1K. So the energy's on the upside, and this little attempt to go was again consistent with this, and it was double that. You don't need to be thinking much. You just need to be watching these fast 10-second bars and making sure you're on the side that's winning. That's all this is. So let's see what happens next. Okay, so let's say you did what I did and you're long here. Is anybody worried about being long at this point? You know, you might be thinking about taking profits because you're near the high, but look at this, guys. You've already got 20 ticks here just by being nimble and watching that corner there. And the LRCs would have helped you with that. We can't see them here because they're real time, okay? So, and then what happened next? Look at that. Gosh, could it telegraph to you more clearly what it's doing? Now, we are no longer open 5A at this point. Look at the time. It's right about open 5B is about to happen. The 5 minutes is about empty. We're just about done. So let's watch what happens. Okay, still reinforcing the long, and you even had a chance to add to it. And okay, it is now at this point, the open 5A is over. That's 635 right there. If I'm in this trade, I'm still long, but I'm going to keep a tight stop right in here to protect my profits, you know, with 20 ticks. And then that's what happened next. So, you know, you couldn't have lost by playing that. And now you want to watch the top of it for retracements because those will be another chance to get long. That's an open 5B. We'll talk about that later. Okay, so that's a really good example of how an open 5A plays out. Just for fun, let's look at it on the ES too, because you'll see normally they're correlated. The ES tried to do something similar, but it was much sloppier. It sold down, it defended the low again, but it didn't have any of the aggression. Compare that right there with what we saw here. Do you see the difference? Look at the aggression of the turn here versus the complete lack of aggression in the turn here. It just kind of, it just couldn't make up its mind. The volume was in both directions, and that was kind of telegraphing that this might happen, that it might take that out later with the Open 5B. So we'll come back and talk about that. All right, where are we? So keys to proper execution. Overwhelming momentum. We saw it in the NQ. We did not have it in the ES. Most days, those two will go together. That's why you're looking for correlation in this trade as well. Correlation is kind of the key to all the index trades, but you can do this in you can do this in the oil, you can do it in gold, you can do it in anything. It's really about momentum and watching high volume nodes, because those will often be inflection points. What do I mean by that? Okay, let's see an example of that. This is the Open 5 today in NQ, and just so it's more visible, let's just light up the overnight. That's RTH. That's the overnight. Okay, I'm just going to temporarily change the color of my overnight volume profile to something really obnoxious, just so we can see it. There it is. Okay. So this is a good example of the point that we're making in the process about how you need to watch, go with the momentum, point 2 here, but watch high volume nodes for possible inflection, okay? Here's a perfect example of it. The attempt to sell down in NQ, and one of the reasons I definitely would have bought this, and I did, I traded this long on the open today, was it was the edge of this high volume node and the edge of another high volume node right there. So the odds that it was just going to blast through that are just really low. On the other hand, if this was low volume and the high volume node was just here and this whole area was nothing, then the odds would have been much higher that it would have broken down through that. So that's why it's important to keep an eye on the high volume nodes, because those are often places you can lean on. Okay, and yes, I realize I'm just giving you a fire hose of information. Welcome to trading. Welcome to hearing 47 years of experience in a session. You're going to have to watch more than once. You're going to get different things out of it, different times you watch it, and your knowledge will grow. Just be prepared for that. That's part of that comes with the territory. Okay, so that covers that. Then there's notes, and for this particular setup, critical, highlighted in red. Do not ever, 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 ever fade this trade. Fade is a trader's word for go the opposite of. This is about one directional momentum. If we're going up, under no circumstances do you say, oh, that's a top, we should short it. You will get run over so fast you won't know what hit you. Don't ever fade this. Trust me, I have spent thousands of dollars trying to fade this, and I always get run over. And I still sometimes haven't learned my lesson for whatever monkey brain human reason. When you're doing this trade, the ideal trade management is to get a stop immediately in between your entry and where the market's currently trading. If you can't do that, that's kind of the market's way of telling you could be on the wrong side of the trade, or it's just too choppy for Open 5. On the other hand, sometimes what will happen, and I heard JVC post this in TRG a couple of days ago, that you'll put it on and you just keep getting stopped out with like 1 or 2 tick winners, and that's fine. That's also the way the market's telling you that you're on the right or the wrong side of it, and it might be too early, or you might need to let it play out a little more or whatever. And so don't think of those things as negative. Overwhelmingly, you just want to think about getting a stop in. And, there's times I don't do it right away. And, sometimes if it's really crazy volatile, I want it to get a little distance so I can lock in some profit. That's discretion, and that's okay. This trade totally requires experience. Look at Amy's a good example, or Blair, or gosh, Maria. There's 100 people, 120 people in TRG. There's probably 20 of them that have found this to be at least part of their bubba, and have practiced this hundreds of times and can reinforce that it takes thousands of times to get good at this. I think I've done this trade probably somewhere in the low hundreds of thousands of times, at least since I named it this. I used to call it the 2 and 2, 2 points in 2 minutes back when I traded the SP in the 90s. But the concept was the same, and I'm going to explain what that concept is in just a minute, because there is psychology and there is human behavior behind each one of these setups. So that's what I'm going to say about the Open 5, and that will be the end of the Open 5 conversation, and then you guys can ask questions. So why does this happen? And this came up in Martin's question in the boot camp, Marty's question about the financials, pre-market, and all that. So let me be really clear on what I'm talking about here. And again, don't try to apply what you think you know about the markets, or what you see on Robinhood, with financials trading an hour before the open or whatever. Understand what I'm about to say, and it's absolute. Please don't, go Google stuff and try to prove it wrong or whatever. There's an article posted in the TRG from SMB that has some statistics about this. But I can just tell you, I've been doing this for 30 years, this trade. It's very simple, and it works for the following reason. Overnight, anything that has an RTH, if a instrument has regular trading hours, then that's all you need. And what has regular trading hours? Well, the indexes obviously are the one that come to mind first. Oil and gold do too, but they play a little less obvious behavior for the Open 5A. They do the Open 5B really well. So what I recommend is that people not try to do the 5A in gold or oil. And that's not on this document, so you might want to write that down. The Open 5A works the best in equity indexes around the world that have regular trading hours. Whether that's the Nikkei or the ES or the SP or the NQ or, the RTY or the DAX, pick it. As long as it's an equity index, it should work pretty well for this. And a bunch of the people in Europe have tried it with some of the other indexes with good success. It works. Here's why. Large traders and institutions cannot trade overnight. Some of them are prohibited from doing so. When you form a hedge fund, you have something called a charter. In some countries, it's called something different. But it basically says, here's what you're allowed to do with your money. It's why investors are giving it to you. And many, many large funds cannot trade at night just to protect themselves. It's too thin. Also, some of them can trade at night, but they're smart enough to not trade any size at night. So, and I've also explained this, I explained a little bit yesterday, anything going on in the equity indexes overnight is pure speculation because the equities themselves are not trading. So the Open 5A, in a nutshell, and this is a good point to write down, is a reckoning. It's a reckoning or a reconciliation, both of those words would be accurate, of the overnight versus what big traders want to do today. So they get an immediate chance to put it on right at the open. And a lot of them do. And that's why we get this trade. And that's it. That's all you need to know about it. Don't overthink it. Don't say, well, wait a minute, there's the pre-market and there's stuff that trades before the open. You're getting lost in furu-ness when you do that. That's fake guru. You're looking at points that are irrelevant. Whether they're true or not, it doesn't matter. They have nothing to do with this. And that's why I'm emphasizing that so much. Okay, that's the Open 5A. That's all you need to know about it. It's a very simple trade. You do it or you don't. If you think about it, you're screwed. You have to just execute. You cannot do it with a 1-minute chart. You need 15 or 10 seconds to do it right. It could probably be done with a 30-second. I've tried it that way. I find I get better signals with 10 or 15 seconds because I get more slices of the first minute. 10 seconds, I get how many versus if I'm doing 15 seconds. I just get more little views. And those little views are very enlightening, as you can see right here. But, if I had this on 30 seconds, could you still see the Open 5A? Yeah, sure, you could. 1 minute, you can't see it at all. Don't even try it with a 1-minute bar. You'll miss. You'll be late every single time. See, here's 30 seconds. You can still see the behavior at the low, but you can't see how strong it was in the first couple of bars. You can only see the result of it. Important point. All right, let's put it back there. And all right, here's what we're going to do. We're going to stop and pause for questions. There's a very good chance that I will need to break this session into a part 1 and part 2 just because there's so much material. I'm prepared to do that. Again, if this takes 2 hours and we only get halfway through it, that's fine. I'll do another 2 hours some other time. Questions about the Open 5A. Let's see what I've got. Okay, Philippe, I began with a new eye when you did it. Yep, exactly. There's some comments here about some of the people from some of the Motleys, which are the guys from the workshop last year, who are talking about that Open 5A-B break. That was genius on our part of our Darren, who was so smart back then. Yes, we're all smart. And now we get older and we realize how smart we're not. Tom makes a great point about reading the energy flow is an art. I want to reinforce that to a bunch of people. Marty, you know, I'm not picking on you. I'm telling you, you're one of them. You have an engineering background, and many of our traders do. You know, Tom is another example. There's a lot of very mechanical thinkers, and for structure, that's perfect. But you need to learn to understand the art of price action, or else you're not going to get good entries with your structure, and you're not going to be able to scalp. So, great comment by Tom about that. Let's see. I'm just looking to see if there's any other questions. Craig, by the way, you are a leading contender with another person for the award for best questions, so keep them coming. I love your questions. And Cameron, you're also a good questioner. So let's see. The question is, I'm having trouble understanding why getting long on the NQ at 35.10 isn't considered fading it. Ooh, great question. Let's look. Can you give me a time of day for that, please? So where are you talking about? 35.10. Oh, you're looking at ES. I brought up the wrong one. So your question is, why getting long? Yeah, you've got the NQ and then you've got the ES. So hold on here. Let's see. Okay, so are we talking about the NQ or the ES? Let's start with that, because I'm lost. NQ. All right. So, and what area or time of day are we talking about? Okay, but you got to give me a marker. The Open 5A trade this morning goes from the open till 6:35, which is right here, right there. Okay. 11710. Okay, so right here. How could you possibly look at that and say you're fading it? You're not looking at the gestalt, Craig. You're looking at the directionality, and that's part of it. But here, let's go back there, okay? Remember, it's a momentum trade. So you're looking at the combination of all the 10-second bars. So if I look at this right here, the energy's down, but it's not impacting the price. It's trying. Look at the delta here. They're trying to sell it, and buyers are holding it up. So the momentum energy here that you should be reading is not that it's going down, it's that it's not going down on that selling energy. And that first little clue that I told you I would have bought it right there is that blue bar there. It's 1711. That's the answer to your question. Okay. You don't understand what a fade is. Fade just means that you go against the pervasive view. So let me give you a better example. This is not a good example for your question. Okay, and yes, the low volume node, high volume node provides context. So Meke is right about that. So let's go look at this one over here. It's probably a better place to look at it. If you look at this here, and I'm not going to make that yellow again, but just put a line right there. Okay, Craig? Now, how could you look at that and say, the definition of fading, and maybe that's just what you're confused about. The definition of fading would be going against the market. The market doesn't have a direction here that you could fade. If this is going up, however, if I was shorting this, that's fading the market. So let's say I shorted right there. That's about the stupidest thing I could possibly do, and that would be a fade. The market's going up, and I'm like, no, I'm going to short because that got sold before back there. So that's a good example of fading. This is not, because the market's not going down. It's consolidating and it's getting bought. Look at the delta here. This is overwhelming momentum on the buy side. That's how you read that. And that's why you break it down to the 10 seconds so you can see that happening and be more granular about it. And again, I understand, Craig, you're new to this. I understand for all of you guys, and you need to understand from me, this is going to take hundreds of times seeing it to learn to see it. It takes a lot of practice. Everyone in the room, if you think this takes a lot of practice because you've done it, if you're in TRG or you're a former bootcamp member, please say, yes, it takes a lot of practice. Say that in the chat right now. I just want you guys to understand that are in the bootcamp now how much practice this takes. So everybody tell us, how much practice does this take? Okay, there, you'll get a little sense. It's a ridiculous amount of practice. I mean, think like, you're a pitcher in a baseball game. How many times do you have to practice to do strikes or free throws in basketball? Or I can't think of an example in cricket. I don't know the game well enough. Free kicks in soccer or football, European football. It takes a shit ton of practice. Yeah, Joey, I'm not there yet, and I've done hundreds, he just said. It takes thousands. It really does. You're teaching your brain to do something. And brains are fickle, okay? So anyway, I'm emphasizing the Open 5A here as much as I am, just because, if you can master this one setup, you can make a living trading. My surfer buddy is a good example, and he's not the only one. There's a dozen people in TRG that have focused on this, and many of them can share their experience with you when you get to TRG. And we do it all. There's a whole channel for the Open 5A in the Slack. Let me just show this so the boot campers can see it. Every one of our setups has a channel in the Slack for the full TRG Slack, not the boot camp one. And you can see the Open 5A, there's hundreds of examples here and hundreds of posts with all kinds of charts by not just me, but a bunch of other people, all the other players here. And you can, so there's so much material here to learn and practice. So again, all I'm trying to do for your boot campers is just tease you about how great this is, this setup, and how much opportunity you have in learning it. But it does take a lot of practice, okay? All right, are there any questions about it? Okay, yeah, I can talk to you about that privately, Craig, if you need more guidance. Okay. Good. All right. I'm just scanning the questions. I don't see anything else. Your question, that's a good question there, Craig. Would a fade be entering against the flow because one might think it could bounce? If you could do that equation thinking in bets, yes, you could potentially do that. That is what an order flow scalper might do in fading what looks more like a top, which that open didn't. Let's look at an example where I might fade. That isn't it. This is one right here, Craig. This is high momentum up that I would fade because it's not going anywhere, see? And then there's some up thrust here, and then the price breaks down. That's where you would try that, not down here, okay? So that's a good example. You have to learn to read it, and it takes a lot of time. But that's okay. All we got to do is practice. All right, that's the Open 5A. Are there any questions about it? How to execute it, about what any of these items mean? It's ridiculously simple. I can't emphasize that enough. You just have to watch it, practice it, and it works or it doesn't. Now, here's a key statistic about the Open 5A. If you take any given week, there's a good Open 5A trade in most instruments about 3 days, sometimes more than that. So just for fun, let's grab the ES chart, and I'll put it to 2 minutes just so I can compress a few days of behavior. You wouldn't want to watch it on a 2-minute chart, but that way we can see a bunch of them. So, all right, I need a few more days of data to make this work, don't I? So hang on. All right, so let's grab 7 days. Okay, give that a second. Okay, this is good. All right, so remember on my charts, yellow is the Open 5 range, and the high and low of it, right? So if you just look, here's a bunch of days. This was a really nice open 5, obviously. See, so here's 3 days. There was clearly a good open, well, 2 days. This one looks like it was probably sloppier. We'd have to go in there and look at it. Oh, I'm on 23 minutes. No wonder that looks so weird. I'm sorry, guys. That just, I looked at that and said, that's not right. But I was trying to explain it anyway. Okay, this will make much more sense. Yeah, Amy's great point. It's like reading a book about swimming. The only way to learn how to do this is to jump in the water. Okay, this is better. Now we can see a bunch of them. So, all right, there's a whole lot of examples you can see, and I encourage you to go back and do this yourself. But here's a really, really good example of an open 5 long. Here's an example of an open 5 short. Here's an example of a short. Here's an example of messy. Today, again, messy. So, 3 out of 5, we had a decent setup. So that's a good example of how frequently it happens. And you have to just learn that, it's there or it isn't, and you go with it or you don't. That's all there is to it. All right, any other questions about it? I don't see any. Cool. All right, let's do HMOMO. And I'm going to take a very quick break here because we're already 47 minutes in. So tell you what, let's take a break here for 2 minutes. I'm going to get coffee and go to the bathroom and stretch my legs, and then we'll come back and we will talk about HMOMO, and then we will jump down to structure for the first hour high-low because I am seeing unfinished business here on ES. Is that correct, Lee? Are you seeing that too? Is there a potential inside-out setup here that we should talk about?
At the high, yeah, and the same thing on our structural view of NQ, although we are below the open, but yeah, we have a decent, well, we have a reasonable chance. Pair of jacks. Exactly.
It's not ace-king, but it's worth playing probably. And just for fun, I'm going to throw that trade on, and you shouldn't trade this way, but I just want to show you guys something. So I'm going to throw that on here in the sim just for fun so we can watch it. So let's go ahead and get long there. So you're over here, and what we're saying is there's unfinished business up here, and this bottom looks relatively strong, and I'll talk more about this in a few minutes. So we'll just speculate that we're going to head out to this direction, and we'll just leave that on in a sim for fun, and we'll watch it as we're talking. So I'll talk more about that in a minute. All right, let's see. That is a true statement, Cameron. You can practice live and with replay. I recommend practicing live in a sim and not replay as much for the simple reason that your brain's smarter than you think it is. You will remember days' patterns even if you don't think you do. So replay will play tricks on you. And if you talk to hardcore professional traders, you'll hear this. And among others in the community, it's a debatable point. So my view on it is that replay is good for testing an idea or a proof of concept. It is not good for practice. That's my opinion, because I just believe your brain remembers patterns better than you think it does, that you've seen before. So I recommend doing it live in a sim and then live in a micro with real money. That's what I would do. Anyway, okay, let's see. Okay, cool. Let's continue. Let me see if my coffee brewed yet. I can see from here it's coming. Okay. Tom, that's such a good point. Mind is designed to protect your ego. That's so true with the replay issue too. I have a little quote on my desk. I have a little journal that I haven't really talked about that I write quotes in that I really like, and I've kept it since college. It's actually a UCSB, my first two quarters of college, notebook. And one of the things there's a little thing in it about controlling the id, and that was written by E.B. White, and it helps me do that too. Google that, Controlling the Id by E.B. White. If you're interested, I'll post it later. Anyway, okay, let's continue. Let me I'm just going to leave that inside out trade on, and we'll come back to it. It's running in the domes. I have no idea what it's doing, but Let's just, okay, so we're actually profitable over there on that little exercise for now. We're just going to leave it running, and we'll come back and talk about it later. That was what Lee and I just talked about a second ago. The inside out today to the unfinished business at the high, which is what, 67-ish. So I'm just going to let that run, and we'll see what happens. That you can do that with those sometimes. Meanwhile, let's talk about HMOMO. So the cool thing about the Open 5A and HMOMO is that they often go together, as does the next one, which is HV reversal, high volume reversal. So I'm going to talk about these two together. The three of them often occur in the same day. HMOMO and HV reversals occur together all the time. Yesterday was a really good example of it, that reversal we had, and I posted it for everybody to see in both the Slacks. That was just a textbook example. So let's look at that one. So this was the Open 5A portion of yesterday, and you can see that, again, this is what a really, really clean, perfect Open 5A looks like. So Craig, this is a better example than the one we were just looking at. So let's use this one. These are 15-second bars, and there's no argument that you're either long here or you're fading it. So this is a better one to use than the one we were just discussing. And you can just see, you're long here or you're nothing. And, there was a debate about this in TRG. JVC missed it. Dimitri and I traded. I don't know how you could miss this one. It was really clear, and that happens. Sometimes they're like this and I miss them. I'm not attacking JVC, although I love to do that. But I'm pointing out that this one was pretty obvious, okay? Now, what happened at the top? So if this is an Open 5A long, and you can see we got, past the 5 minutes, and so what happened next? Well, let's have a look. That's what happened next. And whoops, and this, again, is very, very typical behavior. It's not uncommon at all to have an Open 5 hit a spot, in this case, it happened to be a corner with the LRCs, whatever, and that spot just gets reversed really hard. That is called a high volume reversal. And we already know what high momentum looks like. So this is a really good example of all three trades: an Open 5A long into a high volume reversal, and then a high momentum trade short. So let's look at that in the process document. HMOMO, this is what you get when you have momentum. It can occur as long as there's high momentum. That's all you need. Nothing else matters. It is a scalp mode trade. All of these are, and scalp mode just simply means the following: good trades work right away. Do not lose money. Always take profits. And if you are sitting in a scalp waiting for it to work, you've either made a mistake and you're wrong, or you are early. Both of those things are dangerous when you're scalping. So you learn to be accurate or to get out of the way and try again later. That's what scalp mode means. It does not mean, well, I'll give it a few minutes and see if it works. That's weight structure. If you're in an HMOMO trade waiting for it to work, that is whoever you pray to's way of telling you that you're in the wrong trade. Okay? It's that simple. Okay, those things popping up are just my clock reminders. They don't have anything to do with the session. But it's a good opportunity to make another comment I want to share with you, particularly the boot campers that are new. I purposely don't change anything in my environment to make it easier to teach. I don't use lower resolution so it's easier to see in Zoom. I don't switch to a different set of charts so I can explain it easier. You are sitting in the room. You are a fly on the wall in a professional trader's trading room. And that's the environment we have, and we will not change that. It's your job as a student to adapt to that environment and learn from it. So I just wanted to make that point very clear because a couple of you have asked me about that. And that's what it is. That's what Lee and I have decided is the approach that TRG is going to take. Yes, it makes it a little harder to see some things in Zoom and yada, yada, yada. And we believe that that is a valid cost of admission. Okay. Next up. When can this occur? Anytime. It's high momentum. And remember, I have this other document, just another tab on this, that shows the setups by time of day and by instrument. So if you look at all anytime, there's HMOMO right there. But if you look at the Open 5A, it's only at that one time for any instrument. So this is a good reference, but we're going to stay on this one to talk about the details. Okay. So this can occur unexpectedly. Why? Typically because of news. Or a tweet or whatever. So you have to be prepared at any given moment to take an HMOMO trade or not. And that's one of the harder things about this trade is what frequently will happen is you'll see a high momentum event, and I'm just going to pick a chart here. Let's grab RTY, and I'm just going to randomly pick a spot, like right here, okay? This is a high momentum event. If we were ebb and flowing right here, okay? So this is what's going on, and, we're all snoozing and having coffee, and, JBC's telling jokes, and, we're all just screwing around, and nothing's happening, and then this happens, okay? All right, you just had a high momentum event, and it happened very quickly, and this is 10-second bars. So, in 20 seconds or 30 seconds, this is 40 seconds, you just saw that happen. Well, that one's over. You can't just jump in and join that. What you can do if you're right here is join it. So that's the way I handicap HMOMO trades. So that's how I determine the quality. And again, I use poker. Ace King is when I can get it right when I think it might start and my risk is very low. So an Ace King entry to a high momentum trade, in this instance, this one would be right here because it's ebb and flow. It's a low of the day or the range, both actually. It has some agreeing or consistency with the delta. So I would jump short there and keep the stop very tight at the top of the nearest part of the range. So, maybe 1730, and I would short this at 29. So that's pretty tight, right? But that would allow me to catch something like that. The other thing you have to do, if you don't do that, if your reflexes are not that fast, if you don't want to try to do that, then you need to take a different approach to high momentum. They're both fine. I do both. Let's say I missed that, I just didn't react, or, I'm teaching and you've seen that happen a million times. God, we should get short, and I'll take my mouse over to press the button and that happens before I get there. God, there must be 20 sessions in the live recordings of that happening. And then there's other ones where I, said, God, I should be short, and I did it right there. So, it's a blank, but you have to manage the trade based on when you caught it. If you caught it right at the start, tight stop, nothing to lose, trail the stop down. If it's already happened, then you need to evaluate it much more carefully. So let's talk about that in the context of this, okay? It occurs unexpectedly. You have to make a decision whether you want to go with it right away. And I do that based on how far we are from the ebb and flow. If the ebb and flow is right there, then I'll take it because I've got very little to lose. So again, this initial drop on high energy, I would just either hit the bid or, hit the ask, or I would just, sell the market. I don't know what I would do. It depends. Most of the time I will take a market order in that instance is probably the accurate thing to say. Okay. Now, if I miss that, I won't chase it because look what happens. When you get high momentum, you often get a very short-term ebb and flow. It's hard to see there, but there's one right there. It goes from high momentum down, and then there's 3 10-second bars where it went nowhere, okay? So if you're short, that's where you take profits. If you're not yet short, that's a good spot to watch and say, can I re-enter, okay? And look what happens. Okay, perfect example. So you had another shot at it right there when it paused, and it just kept going. Okay, so again, it's an art. It takes practice, but the idea is the following. You're looking for overwhelming momentum in one direction, and I do not mean the trend. It has nothing to do with the trend. It's just about short-term directionality, momentum. It looks like I just showed you. It's not direction. It's not trend. It's momentum of a direction. That's a very subtle but critical point. The second key to properly executing this is that it often ends as fast as it started, and then it can typically become a high volume reversal. That's very common, and I showed you an example of that yesterday. And there was one this morning too, right there. You get that a lot, so you have to be very nimble trading high momentum. Okay? The notes about this one: never fade this. Again, the last thing you want to do with high momentum is say, oh, I'm going to go against it. So you either go with it or you look for an opportunity to join it later when it pauses. So number one, go with it right away. Number two, if you paused, wait for a pause in the momentum and see if there's an opportunity to join it. But never, ever, ever fade it. If you're doing that, you're doing a high volume reversal trade, not an HMOMO trade. And that's a critical point. Okay? I typically market order into this, as I said. There's cases where I will hit the bid or the ask, but that's daft, because often what happens is, you'll try to save a tick and you'll lose, 100 ticks. This trade happens quickly. And again, it's often news or a price level breakdown driven. And that example I just showed you in the RTY was a price level breakdown. That's exactly what that was. Remember this, let's look at it again. This is a level we're ebbing and flowing at. So that temporarily means that everybody agrees on price here. So the opportunity in ebb and flow always comes at the edge of ebb and flow, either here or here. So the first edge we get broken is that one. So that's the opportunity. That's how you read it. It's that simple. Okay. That's HMOMO. Now, again, I have to emphasize that all of my scalp setups are price action pattern recognition setups. They are visual, they are art, and they take practice. If you're trying to look at them from an engineering point of view with a step 1, step 2, confirmation, enter, place stop, place profit target, you will get mauled. That type of methodology does not work for scalping that is artistic like this. You need to learn to read the price action. That is how you get good at this. And it is not a mechanical engineering level discipline. Engineers can do this really well. And if you can stroke your art side with this, if you have an engineering type personality, you will find it working. And that's the key to all of these scalp setups. Okay, good question, Martin. What is stop entry plus? That just basically means, let's see if we can find some volatility and I'll show it to you, because that's a great question. It's a very important question. All right, so red light, green light, which way are we going? By the way, that's working. Okay, we've got green light. Let's get long. We're already upside down. It's working against us. So I can't get a stop in, but as soon as it gets positive, there we go. Okay, now I've got a stop. So it's between me and the entry. So it's a positive. It's taking profits. That is what stop plus means. And I just showed you, God, that couldn't have worked better. That's how you do it. And notice how we have a profitable trade on our inside out here. That's this trade over here that we're going toward that unfinished business. And what are we up now? We're long from 57. It's at 62. That's what Lee and I mean when we say the inside out trade is kind of a turn it on and forget it trade. We're heading up here, and yeah, you could trail a stop if you wanted to protect profits, but that's a different concept. But okay, I just locked in what? Let's see. Let's lock in 3 points. How's that? Okay. Anyway, we'll just continue to let that run. But putting stops on it can sometimes cause you to get hit. So that's why with that setup, I generally won't do it. I'll just watch it. Okay, so we have talked about Open 5A and H momentum. We're about to talk about HV reversal, which is really two HMOMOs glued together. That's really what it is, but you need to understand it a little more clearly than that. So let's go find a really good example of an HV reversal. And my favorite would be yesterday. Yesterday was just classic HV reversal. So let's go back and look. Okay. Sorry. All righty. Oh, I'm sorry, guys. I'm on the wrong screen here. I didn't want to be there. I want to be here, and I still don't have the right series. Okay. let's switch that to 2 minutes just to zero in on it, and then we'll come back. Okay. Okay. All right, what I'm doing here is I'm just dragging around and I'm looking for examples of this setup. Here's a perfect one. So 2 minutes, 1 minute, doesn't matter what we're looking at. That's high momentum. If you're not clear yet, that's what high momentum looks like, okay? It's going one way and it just keeps taking out lows and not making highs, right? Then this happens where it just comes to a point. And if I was displaying volume here, you'll typically see volume peak. And that's one of the reasons I run this down here. Hang on 1 second. Let me grab something else. Often, if you look at the Auction Vista heat map, you can see those kinds of corners. Here's an example. This is high momentum down. And then if you look at the volume right there, you get a high volume reversal when that ends. So the key to this entire situation that you're looking for is watching directionality just stop, volume peak, and then completely go the other way. And so, again, and this isn't a brain surgery setup. You just have to be paying attention. And no matter what interval you're looking at, that's what you're looking for. So that's a really clear example of it. You can just literally scope charts and see other ones. Here's another one right here where, it went up strongly and it turned. Here's another one right on the first hour high right there, or what should be the first hour high. We're not there yet. Oh, yes, I'm sorry, 818, we are. So that is the first hour high. So again, today, perfect high volume reversal. That's what they look like. There's another one down there. So very predictable pattern. The keys to it are the following. It's high momentum, again. So if you're in ebb and flow, you don't have an HV reversal. You generally are coming from one HMOMO event to another. That's typically how this happens. It can happen any time of the day. Again, HMOMO is typically how it starts. How can you reverse if you don't have if you don't have momentum that you're reversing off of? So, it's just common sense. This is the key to executing it well. It has to be high volume into a suddenness. So the suddenness here is the key to this trade. And that usually is, quote unquote news, something hitting the tape, whether it's an economic report or a tweet or whatever, So this tends to happen suddenly like that. And then point 2, again, critical. If you don't catch it, look to fade it if it's weak. Okay, so sometimes you'll see something that looks like a high volume reversal and you can always join it. That's obvious. But if it starts to be weak and it's not really reversing aggressively, sometimes that's a clue that you're really not getting a high volume reversal. And so I put that in there just as kind of it's not really a bias, but it's worth remembering. That's what these keys to execution are.
Jeff, I'm just going to jump in.
I generally am pretty good.
We've got our inside out trade.
Oh, we do. You're right. Thank you. I'm glad you jumped in. So here it is on the dome, and let's go grab the footprint. So there's the UB, and we're right up there now. So odds are it's going to puncture that. And so at this point, what you want to do is be real taking profit oriented because it could start coming back pretty quickly. So let's tighten that stop up. And God, we've got a whole lot of ticks, 57 quarter, all right, we're at 64 quarter. So we've locked in a lot. Now I'm at 65 quarter. So basically as we, start to exhaust this as a scalper, I'm going to want to take profits. This probably has more room than I'm giving it. Let's give it a little less tight there and we'll watch it. But thank you, Lee.
One other interesting thing about it, the base of the C period, 9:30 Central, gave us our price rejector.
Right
the
there,
base of the D period gave us price rejector on the open 5 low.
Yep, that's all true statements. So the classic setup. And once again, we have the frustration of teaching and not trading live. This is a sim. Oh. So, I don't say that because I want you guys to, oh, poor Jeff. It's just, that's routinely happens. So it's just a frustration Lee and I have. I'll see a setup like that. If I wasn't teaching, I put on a 10 lot in the ES, not a 1 lot in the micro. And it's enough to buy a new house. So, that is frustrating for us. We laugh about it, but I got to tell you, it is. So understand our human FOMO-ness because we are human. And Lee was talking about the 1 minute price rejector. I've got a 1 minute over here, and you can see really clearly that that direction is really strongly this way as well. So, okay, let's see, Manny. Can I show an example of what you would need to see when you were wrong and kill the trade? Are you talking about the inside out trade or the HMOMO trades, Manny? HMOMO. Okay, yeah, we'll talk about that in just a minute. We'll just let this play out a little more. I'm thinking it's going to go get that UB, which is up at 70, or excuse me, at 67. So the UB is right here. I've got some overnight. This footprint or this volume profile is overnight too. So this is that we're actually at the ledge of the session right here. You can see that. See, that's the session ledge, and we'll talk about that definition in a minute. This is the overnight ledge, and the UB is right here. So that's why, odds are it's going to take out the UB and then come back. So let's tighten this up and take profits here. Okay, and I think that's about to happen. And just so I can keep talking about it, I'm going to let it fill there. So that was sweet. Okay. So the question was, with respect to HMOMO, what would you need to see that you're wrong and kill the trade? It's a great question. Let's just grab a fast chart and look at it. So let's just say we're in HMOMO. We're in this trade right here, okay? What do I need to kill the trade? Well, it depends on a couple things. Where's my entry here, okay? So let's say, I did what I thought I would do on this trade and I got long back here. Let's say I was just a genius and I bought that, 710. I'm up here. I got a lot of profit. I could put my stop, my trailing stop could be below the open 5B right now. And I still have a ton of profit and I'm giving it room to work. I could be adding to it. There's a whole lot of ways I could trade this. So, but for right now, based on what it looks like here, I have no reason to take this trade off. I just either trail it or add to it. No way I take profits. Okay. And let's let it unfold a little bit and we'll handicap it as we go. So at this point, am I taking profits? No, I probably added to it. This looks like it could be an opening drive, and I don't use that term in TRG, but some of you know it. It's a market profile term. Morad uses it at FT71. It's one of those things where we take off in one direction and we just keep going, and A period, B period, yada yada yada. I would still be long here. So now that type of behavior keeps going. So I'm still long. I would just kind of be scooting a stop up, higher highs, lower. I'm not retracing at all. And as long as that's going on, you stay with it. Now, the key to being a good scalper and the key to any scalping setup, Manny, is understanding when conditions change. So at this point, have conditions changed yet, Manny? Have they? Yes or no? Just type a Y or no. Okay. So we're still long here. Yeah, trail your stop. You manage to trade any way you want. But you have no reason. You could be adding to this easily, but you certainly have no reason to take profits yet. Okay, now that right there, forget the price action there. Just the fact that we are at the first hour high here, that would be just hey, that's often an inflection point. So at this point, as a scalper, I've got a tight stop. Because I just want to take profits. I got a beautiful trade. So, I don't want to be greedy. I don't want to be stupid. It could continue. I could always re-enter on a pullback. But at this point, I've got such a sweet trade. I'm just going to take profits. But let's say I didn't. Let's say I just entered here. And, I caught the second, if this is 100%, I caught 20% of this move. I left a lot on the table. And now I just got long. So keep it tight. But the key answer to your question, Manny, is when the behavior changes. If this is a high momentum trade, when is it no longer high momentum? Right there. Notice how, all these little pullbacks got bought aggressively. This one's getting sold. These are sell bars. These are not pullback getting bought behavior. There's a little attempt right there to buy it. Let's watch that one, see what happens. Does it get anywhere? Look at that spot right there. That is an up thrust. That is the perfect spot to short this. Or if you're long, that is a clear bazooka bullhorn saying take profits. Because up thrusts are the market's way of telling you that a move is ending, okay? And look what happens. Another up thrust, yet another up thrust, a tiny, tiny little spring that fails, and then it just gets sold. Tries again, see it, that exact same spot. So that's the key, that's the answer to your question. This is clearly HMOMO, is this? No, that's ebb and flow. So when the behavior change, take profits, get out of the trade. It's that simple. Okay? Hopefully that made sense. Yep, okay, I don't see any other questions that I missed. No, okay. What time is it? 8:22. Okay, so that's HMOMO. That H reversal, we covered that. HMOMO to HMOMO happens frequently. Okay. Sorry, I'm just thinking out loud here. All right, let's do this one because it's the last of the scalps. And then maybe what we'll do is we'll have part 2 of this setup clinic be about the second ones, the weight ones, because that's a really sweet spot to break it in half. Does that make sense, Lee, that we'll finish the edge of the range, ledge, and then leave the last two? Does that
yeah,
work for
I
you?
think so, yeah.
Okay, so we're not going to talk about these guys today. That will be next time. So let's focus on this one. Because some of the terms in these, and I'm just highlighting this for a second so you guys know what I'm talking about. A lot of the terms are going to be similar in these last 3, but I really want you to understand that I am not talking about, I'm not talking about these bottom 2 today. The weight structure ones we're going to hold till part 2, but a lot of the terminology that I'm going to use appears in all 3 of these. So don't get distracted by that. We're going to talk terminology, but we're not going to get into these 2 in detail, okay? Martin, can I describe why I was comfortable being long at 634? Which instrument, Martin? Manny's trade. Okay, Martin, you need to understand here. I'm teaching the setups, and when I answer a question like that, I don't take notes about what I'm answering the questions about. So if you'd like to ask a question, please say, why would you be comfortable taking along at 634 in ES or NQ? Don't force me to remember and go back and look at what I was talking about 10 minutes ago. I just can't do that, okay? Is it this one you're talking about? All right, I'm just going to move on. Okay, so let's talk about edge range and what these terms mean. It's important to understand the distinction between edges and ledges. This has come up a bunch of times. And again, just to make this real easy to see, let me change the color of one of these because I know on Zoom, it's a little harder to see. So let's make them just really stupid colors here. Okay. Magenta, that works. Okay. All right, so that's the overnight. And let's change this one. And we'll make that be cyan. Okay, so these are the two volume profiles. This is the overnight session. This is the regular session. I'm not coloring. Okay, there. So now you can see really clearly the two different ones, okay? So overnight sessions, the thing you want to watch, so this is overnight, remember, this is overnight, so the purplish ones, right, magenta. What you want to watch for these during these setups, and I described this in the document, okay? You're looking for high volume nodes, right? We've talked about that term a lot. You see HVN, you see it there. You see IP, you see wave volume and auction structure, okay? A lot of those things are similar things and they're all important, so let's talk about them. The overnight high volume nodes that I lean on, whether it's the open 5 or the open 60, the first hour high and low, or momentum trades or high volume reversals, I'm talking about the bumps. So this is one big bump. This is a high volume node. This is another one. This is a low volume node. This is a high volume node. The edges, edge, E-D-G-E, not meaning advantage, meaning edge as in the extreme of something. Okay, if you have a high volume node, it has edges on either side of the high volume. Okay, so let me draw that really quickly. Where's the draw tool? Okay, so this is an edge, and that's an edge of this high volume node, okay? I'm not making circles, but you get it. That high volume node. Likewise, there's another high volume node right here, okay? And it has two edges. Low volume, we don't care about. We care about the bulges, and we care about them overnight, and we care about them during the session. But we recognize that the ones during the session are different than the ones overnight, and there are various ways of combining them together that matter that we can't talk about today because that's more sophisticated. But what we can do is we can just look at where the bumps are because that's easy. Okay, so let's get rid of all this stuff I just drew. And let's see. Okay. Now, there's another concept here, and let's see if this is different. And that is the concept of a ledge, okay? A ledge is the edge of the entire volume profile. So there's one right there. There's another one right there. There's one right there. There's one right there, okay? So ledges are the edge of an entire profile. Edges are the edges of the bumps. Is anybody not clear on that terminology? That's critical that you understand, or none of this will make sense. Okay, so there's high volume nodes. They have edges, which are just the edge of the bump, either side. And then volume profiles have ledges, which are the session edges of them, real time or not. So right now, we're building one right now where we have an edge. And it's also a ledge because it's the edge of the session. Okay, is everyone get that? Are there any questions? That's got to be really clear or you'll get lost. Okay, so let's go back. Oh, damn. Let's put the spotlight back on. Okay, and we'll put that back, and let's go back to the process document. Okay, so this setup is looking for edges of ranges, okay? And it's also looking for session ledges. In other words, the session edge there, okay? That's critical. Make sure you understand that part. If you don't, you'll be really confused. The price action we're looking for is ebb and flow into high momentum. That's how this setup occurs. It is a scalp setup. What frequently happens, this is the setup where, and you'll hear me say this over and over again, that when we get to a ledge, 99% of the time that will break in the direction we're going. And this one did already. It just did. Why do they do that? Okay. They do that just simply because retail traders will always try to short the top. They just do. And the order flow traders will always run right over them. So you'll see this behavior over and over again. Now, I'm showing some volume here that was not part of the regular session. This is the overnight. So we are at the ledge right now. We are breaking through it. You can see that there. So this is a really good example of this setup. It's important that you understand it will break that very quickly, and then it often goes right the other direction. So this is often a two-way trade. It can occur any time of the day. The only thing you need to watch for is that you need to be at that extreme edge of wherever the session is. So a session ledge is the key to this. Ledges will break out first. That's the 99%. So if I am sitting in this setup right here, okay, and we haven't broken that high yet. So let's say we were right there, okay? This is a 99% odds long trade. And it's almost 100%. This trade almost never doesn't work. What's important to remember is that it may only work for 2 or 3 ticks and then reverse really violently. Although, with momentum like we have right now, that's not typical either. So anyway, watch what happens here. Remember, this is the ledge right there. That's what we're going to break. Boom, we broke it. So by being long here, you just went from 65 to 67, 2-pointer. And then it came right back. So that's why it's always a two-way trade. So that's what this means. Look to fade it fast if the breakout is order flow weak. So often what I'll do with this setup is I will trade long into it, and then I'll put an order up like that to sell it so that when it spikes up like that, it'll fill a short and go the other way. So that's one tactic that you can use to play that particular setup. Okay? It's always a two-way opportunity. You never want to look at a ledge breakout as a long or a short. It's both every single time. You do not want to have bias in this trade that it's going to continue. It might, but if the ledge breaks and it continues, it becomes what type of trade? Anybody? What setup is it if a ledge breaks and continues to go? Which one of these is it? H-Momo, exactly, Jamal. Exactly, Craig. You guys are listening, paying attention, and you are learning. Correct, Manny. You all got it. So when you're sitting at that ledge, just look at the chart. It's real easy to see how this happens. We get up there, and again, let's look at it on this 10-second view. So this is the spot where you're saying, okay, I want to be long here because it's going to break the ledge. It always does, right? And, I have people argue with me, oh, come on, and they go back and they look at 2 years and they find, 4 or 5 examples where it didn't break and they say, well, that's 98%. Don't be that guy, please. This is art. Again, don't nitpick with me, please, because it frustrates me and it means you're not paying attention to the point. The point is, if you're thinking in bets, you want to be long here, and that's all there is to it. And then look what happens. It blows right through our ledge, and then it reverses. Look at that reversal. And it's a high volume reversal. So absolutely, if the ledge is going to break and keep going, you'll get H-Momo. You won't get that. And it won't, play around here. It will just blast off and keep going. And that's a possibility. We have that possibility today, but so far it's not happening. Okay, you guys are doing great. So keep it up. Let's go back to the document. We're almost there. So that's what this trade is all about. All the scalp trades work the same way, roughly. Take them or you don't. You have to be nimble, take profits quickly. Any one of these are good ways to make money. If I were you, and I like to say that a lot, I would just learn the Open 5A because you can make a living trading the Open 5A. Not only have I seen students in this room do that, but my surfer buddy, he's been doing this close to 20 years now. I taught him this. It was a joke. He was watching me do this trade, having a beer, and he said, "That looks just like surfing." And I said, "You know what? It really is." He said, "Then teach me how to do it." And I'm like, "But you don't know what a bid is. You don't know what an ask is. He's like, "I don't give a fuck." Just literally, he said, "Just show me how to do that." He's like, when you learned how to surf, Jeff, how did you learn? And the way you learn how to surf is you paddle out on your stomach, and you have a whole lot of trial and error in how fast you can get up, and then how long you can stay up. So this trade, he said, so basically this trade is just a matter of catch the wave and get up and stand up for as long as I can. And I said, yeah, that's exactly right. He's like, okay. So he bought a computer and he started practicing it. And 6 months later, he started doing it. And he's been doing it for 20 years. He knows nothing about the market beyond that. Literally nothing. And he trades it in the ES with a 10 lot, and he trades it or he doesn't. Some days he doesn't, some days he does. So there you go. That's what I would do if I were you. However, all the rest of these are really nice complements of that, particularly HMOMO and HV reversals, because those come in the middle of the night. All you have to do is be at your computer when HMOMO or HV reversal happens, and you've got to trade. You don't have to be waiting for the opening, regular trading hours or whatever, which is nice. So again, my view, if I were you, I would really focus on the Open 5A, and I would kind of put together a good understanding of all of these guys, right? Let's highlight that way. These guys, all of the top 3 scalp trades. Okay. So that's a pretty decent logical break spot, certainly for questions anyway. And then we can come back and see what else we can talk about. I think I'm gonna leave these last 2, and like I said, the structure ones we'll do in the next session, and we can elaborate on them. Okay, so Jamal, does the entry buy, stop, or mark? Oh, great question. All of these, in general, with any of the scalp entries, you won't go wrong entering with a market order, because scalp trades work pretty quickly, and the worst case scenario if you use a market order is you might have a little bit of slippage, but if you're right, you'll still have a trade. One of the dangers of all of these setups is that if you put a limit order on, it will just run away from you. Having said that, it's also instrument dependent. I will almost never use limit orders to enter in the NQ because it's just too easy to get burned, and micro NQ as well. On the other hand, because it trades, within that chaos, it trades somewhat predictably, you can kind of figure out where to put your orders. So if we look at a heat map of the NQ, for example, give this a second to paint. Okay, hang on here. Okay, that's better. So 1 second, it's still loading data. Come on. Oh, Zoom, thank you. Okay, there we go. All right, so this is a good example. If you're watching the NQ, you can't watch individual price levels. So what I do is I kind of compress it together, and I'd look for clusters, like this cluster down here would be a good spot to get long, and this cluster up here short. Whereas, in the ES, it's a lot easier to see where actual size is. And, you can see there, it's not nearly as sloppy. So again, instrument dependent. But I tend to, certainly in the ES, I use market orders, or, I'll come in and hit the bid like that, rather than not a market order. But what you don't want to do is you don't want to, miss a really cool HMOMO move because you were sitting in a limit order and, it went 300 ticks. And that's happened to me over and over again. So I just don't recommend, you're better off just hitting the market, take the slippage and, and put on your big boy pants like I just did over there, and we'll get this one too, but it'll be more structural and it'll be slower. Whereas, NQ just says, yeah, you're right, Jeff. Pat you on the back right away. Go have a beer, and the ES says, well, I'm going to make you wait and think about it for a while. You're right, but it's going to take a little more time. That is structural scalping. That is video game scalping. How did I misspoke? Please elaborate. Oh, did I say that backwards? I want to use, okay, no, I said both. Okay, market orders to enter when it's moving in NQ, and then limit if I want to lean on a volume node, Donna. So it was both of those. You heard it right, but it was both. No, you don't need to apologize. I will use limit orders or hit the bid or the ask in a structural scalp, In a market scalp, in a video game scalp like an NQ, I will lean on areas with limit orders, like maybe like that. But if there's momentum, I will just grab it with a market order like I just that way. That's what I mean. So it's actually both. No need to apologize. You heard it right. You just missed that subtlety. And there's a lot of subtleties here. So don't worry about it. And we'll just kind of let that play out and see what happens. My instinct with this is to do this. So let's see if this works here. I'm adding size to a very, yeah, and that did work. So anyway, you can do that. Video game scalping, you need to have multiple entries because it moves around a lot. But if I think, right now, I don't think this, but let's say I think ES is going to go up really strongly. There's no argument. You go in with size. And you go for the tick with size. And you don't put it out here. If it's going to move strongly, get some size on there, baby. That's a 5 lot. We're going to get one tick on a 5 lot, and that's going to be $100. Boom, done. That's what you do when you have an ace king. That's what you do in ES, but you can't risk that in the NQ. You got to scale into it. So hopefully that makes some sense, Donna. That was a good question. Other questions? Cameron, Jeff, please. Approximately the number of times a week the Open 5A works. Yeah, it's about three or four typically out of 5. Sometimes it works every day. It depends on the conditions. When we're in a consolidation like this, where it's ebb and flow, we typically don't get as many good Open 5 setups. When we're trending like this, we typically get great Open 5s, and you can even see them here. There's a really good one. There's a really good one. There's a really good one. So there's 3 in a row right there that were all really sweet longs. So, you take whatever you get. The key to trading the high momentum, that's pretty obvious. But the key to the Open 5 is to just, be ready to take whatever it gives you. And likewise, the key to HMOMO and HV reversals is to just be really in the now and don't hesitate. Don't have, deer in headlights. Go with it. If you're wrong, get the hell out of the way, I posted something in all of the Slacks yesterday, not to show you, how cool I am or how great I am at doing anything. I posted some P&L, and I did it because I wanted to just show you what consistency looks like. This isn't about, how much money I can make in an hour or a day. I was demonstrating to you that if you can be consistent, you can trade micro 1 lots and make $100,000 a year. And so the message there is learn to be consistent. How many times does that come up in my stuff? I mean, in my processes, it comes up, and it comes up in my rituals. And, the word consistency and process is everywhere. If that's not just banging you on the head with a sledgehammer, you're not listening. Okay? So, questions about anything we've talked about today? We will get into these last 2 in part 2, which I'll have to figure out when to schedule, and I will. Consistency is king. And you know what, Amy, you also have to give yourself permission to not be consistent. I've had just a total, and again, when I'm being passionate and having fun, I use profanity. So if that offends you, mute me now. I've just had the worst fucking time for the last 3 months between moving and transitioning to Sierra and my 38-inch monitor, and a just wicked rheumatoid arthritis flare a couple of weeks ago. I mean, I was on my deathbed, guys, and that really sucks. And I had just day after day, those of you that are in TRG, I talked about a little bit there. It was like death of 1,000 cuts. It was like every friggin' day I was just making mistakes that I know better. And that's what we were talking about. We did a roundtable on funks and surviving a funk. That in trading is what's called a funk. And they happen, so you just have to work to your consistency. And if you're not being consistent, scale down, go to sim, or take a break. That's all there is to it. Your skill won't change. Your ability to execute will. And it's very dependent on your humanness. And if you're having trouble with humanness at any one point, whether it's, that time of the month, if you're a woman, or you're having pain from your injuries from racing motocross like me, or you have RA like me, or, you have hyperactivity disorder like David, and, whatever it is, there are times when your shit just won't work, folks. And you have to learn to recognize that and just get out of your own way. The beauty of this type of price action trading and the beauty of these scalp setups is they will work as long as you execute them. So if they're not working, you're executing bad, sit on your hands. And when they work reliably, consistently, make you money. And that's why I showed you that P&L yesterday, because I want you to see that when you are using your skill appropriately, and you don't have an RA flare, and you're not in pain, and your monitor isn't distracting you, and yada, 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 you just take your skill and execute, and that's how you make money scalping. And that's how you make money with any of these setups. And you can do it every day. It doesn't matter what the prices are. It doesn't matter what price levels are. It doesn't matter what instrument it is. You can do it in gold. You can do it in oil. You can do it in the equities. You can do it in the DAX. None of that matters. All that matters are these criteria. And I assure you, I can say this unequivocally. And, if you have a debate with me, bring it privately, bring it publicly. I can say unequivocally that I can point you to hundreds of people that are routinely executing these setups, making money day in and day out. And there's people in TRG doing it. I do it. There's people that are not in TRG that do it. These setups exist in every set of market conditions and every instrument. So they are the golden goose of price action setups. You need to learn nothing else to execute these well. There are no other parameters you need. There's no other information you need. There's no magic indicator you need. There's no magic platform that you need. That's it. This is all you need to know. Practice it. Practice makes perfect. It works. That's it. Questions? Ooh, some good ones. Okay. George says, what is the best way to identify a head fake? Yeah. This is a tough one. Does it happen early in the first 5? Okay, there's nothing called the first 5. We have the open 5, playing with you a bit there, but please be consistent on terminology. It's important, particularly for those that don't speak English as a native language. Could anticipate it cause you to miss the trade? Okay, those are 4 really good questions. So let's take them one at a time. The best way to identify a head fake is head fakes will happen typically in the NQ over the whole 5 minutes. Where, there's typically a lot of fake out going on in the NQ. It's just the nature of the instrument. So a lot of times the first 5 minutes will look like this. And the key to being on the right side, George, is not the price action individually. It's the gestalt of the price action. And that's a TRG kind of concept that's important to internalize. I'm going to put this right at the open 5. Okay, that's the end right there. That's pretty confusing looking, isn't it, if you just look at it directionally? Wouldn't you say that, George? That could be 4 head fakes, right? Or, that's a tough one. But let's look at it from a different perspective. Let's look at it from the perspective of the price action. What's this price action? It's ebb and flow, right? Any question about that? Consolidation, most common, means price is more or less agreed. Where is the opportunity in ebb and flow, George? Please answer it in the chat. Where do I find opportunity in ebb and flow? Direction changes. Okay. Let's define that as when it leaves ebb and flow. So the opportunity in ebb and flow is when it departs. So the edges. So this behavior is telling me that this is, in Lee's nomenclature, this is a really strong bottom. This got bought. Is this getting sold as aggressively as this is getting bought? Yes or no? No, it's not. So right now, I'm going to look at this and say, my bias is long. I'm going to want to be long because that's what the thinking in bets is telling me here. And then, of course, we know what happened. All right, let's look at the ES because it's totally different. The ES behavior could not have been differenter. How's that? Okay, here's the opening. And, if you caught that, great. And this happens a lot in the ES where you just go with it because often the head fake is tradable in the ES. Write that down. The head fake is tradable sometimes in the ES. This was a head fake, but it was tradable. What happened? Well, we sold off down to what became an ebb and flow. So basically, same story, right? That is the open 5 right there. Okay, right there. Okay, that's it. So, but does this one look different compared to the one we just looked at? And Marty, I hope this is answering your question as well. If not, feel free to chime in here. I'm trying to come back to your question about the previous one where you couldn't tell me what instrument we were on. Okay, I'm trying to tack back for you here. Okay, this is totally different than NQ, right? This looks like the energy is testing the low, right? So that's a totally different behavior than we saw here. Okay? So in this, to answer your question, Martin, the stop would have to be under the low. And that's why I would get long here and give it room to work. And, that's why arbitrary stops are so hard to manage. I would put it under the low and I wouldn't automatically take it. The order flow would have to be overwhelmingly negative to take it. Do you understand that, Martin? Hopefully that answers your question. Let's go back to the ES example because you can see this is completely different. This is an attack on the lows. This is not a rejection of the lows. And let's see what happens. It keeps coming back and saying, I want to attack. And then, boy, it probed it right there. So it took out. So that open 5B says that the lows are going. And it got them one more time and then it bounced. So this is just a messy open that ultimately takes that out right there. It was telegraphing that was going to happen, but it would have been really hard to manage risk. So this was really sloppy. Does that make sense? Does that answer your question, George? It's a matter of just combining, gestalting, okay, the price action and its energy at the edge. That's what it's really about. Okay, good. And I realize completely this takes numerous times looking at it and hearing it to learn. And I suggest that to you too, as Martin, as well. It'll make sense when you look at it over and over again. Okay, there were some other good questions here. That was George's. Thank you, Joey. I really appreciate that. And God, you go back to TRG, 6 months ago. So that's a really good example. Even someone who's been hearing this nonsense from me for 6 months is getting more information out of it, hearing it for the 50th time or whatever. So, boot campers, that's a good message for all of you. Okay. So what other questions do we have? I think I covered the ones in the chat. I'm trying to make you all as comfortable as I can with asking questions today, because today is one day where you're allowed to do that. And we will elaborate on all of this when we do session 2 of this, because these other 2 setups have elements of the scalping too, but they're a lot different. And the one we just did, is a perfect example of inside out. And that's edge to edge or middle to edge. And we'll talk about that again next time. But today was just a perfect example of that. We're still sitting at that point. We just haven't, we're just kind of churning up there, but you could see that 37 level got taken out, that 67 level got taken out. We ran all the way up to 70. So that's why those trades are always two-way. That's that ledge edge breakout thing that I talked about a little while ago. All right, I'm going to start looking for burning desires and questions here. So burning desires going once. What questions do we have about anything we've covered today? You're welcome, Martin. Christopher, before we go, anyone wish to, is it Joey's happy birthday? Absolutely, Chris. Thank you for pointing that out. Joey, are you 78? Is that correct? Or is this 77? Because it blows my mind.
The bumps.
Exactly. And it's on veteran, 77 and a veteran. Well, number one, thank you for your service. And based on your age, I know what time that was. So that was a really rough time. That's Vietnam, guys. So thank you for your service and happy birthday. And for those of you Michael Chaz and David Tomas, a life well lived example is in the room. Joey is also a basketball coach, which I believe is how he knows Chris, and who is a professional basketball player. If you didn't know that, Christopher is a professional basketball player, guys. So we have some real celebrities in the room. You guys just don't know it. All right. Well, happy birthday again. That's awesome, Joey. And God, if I'm just on this side of the grass at 77, I'll be shocked and very pleased. I'm 60 years old, and I've had pretty rough health since the 9th time I broke my back racing motocross and hare and hound in the desert. And Martin, you and I will have to someday talk about motorcycles, because I saw from your profile that you're into them as well. I raced B-class motocross, and I raced B and C hare and hound in the 70s. He was your coach for years. Oh, that's so cool. That is so cool. Awesome. I love that. That's such a shining example of keep your brain active, and it will work on your behalf. So that is so cool. Question, Jeff, for a new person practicing the Open 5A. I believe you said to focus on the ES first. Yeah, well, it depends on what goes with your personality. My surfer buddy is very good at seeing wave patterns, whether it's in the ocean or in traffic. He's also a pilot, and he talks about it on the runway all the time. And so I fly with him. And my answer to that would be that the NQ is very video game-like. And so if that suits your personality, it's fun to practice, but you have to really learn, this thing here, look at this liquidity map. You really have to learn to lean on the liquidity sometimes, and sometimes take market orders, so there's definitely an art to video game scalping. I would recommend trying it with the micros in MNQ, in other words, and use combinations of market orders and limit orders. That's how I do it. Like I'll say, all right, let's just play a little game here. Let's say I wanted to buy 46 right now. So I want to be long, down in here, but it's not down there. And I still see some energy that's long. So I will go ahead and take a market order long, and then I'll try to add to that trade if it pulls back. But right now it's just going to rock and roll. So, I would probably try to get a stop in here and take profits. But that's a really good example. So now we've got a stop in, so we'll protect our trade. We'll reload it when it pulls back. That's how you do that. So I'm trying to stay long, but I don't want to just take market orders because they don't give me very good fills. But that doesn't mean I can't do it. So that's video game scalping. We're doing that over there. Whereas the ES just doesn't move enough to do that. If it does, it's the wrong day to trade it. So what you have to do is kind of, lean size in, and then, kind of do that. That's how you play that. So it's just a different technique. See how far apart I am, see how tight I am, so I'm long one here looking to just get a tick, and if I can put on 2, 3 more, I'll do that with them too. So, all right, so now we've got 2, we're looking for ticks. That's how you do it in ES. You work a position around a value or around a node, and now we're going to get probably filled on our first one. Then we'll have one long. Let's get rid of this one. So you can see we're long 2, and we're trying to take them off as we go. Meanwhile, this trade, doesn't have an active position. We're trying to have it come back to us. So it really depends on the instrument and which one works better for you. I hope that answers your question. And let's see if this plays out. It will. I can promise you it will. That's my blank. I can just tell you that this will fill. There it is. So, can I predict the future? Yeah, I can. In the very short term, I have a crystal ball. No question about it. But it's a learned skill. It's not that I'm so amazing. Yes, for a 60-year-old, I have a pretty fast reaction. I was a sprinter at UCLA and in high school. I have fast reactions. That's a huge advantage for a sprinter and a huge advantage for a scalper. But that doesn't mean you can't do it if you have slow reactions. It just means you have to manage yourself differently. If you're an engineering type guy, like Martin, you have to look at it more procedurally, but you cannot ignore the art. If you ignore the art, you will miss every point I make about the behavior of price action. it's definitely a blend of skills to be a scalper if you have an engineering mind. Structure will make much more sense to you, but if you don't understand price action, you'll never get good structural trades. Okay, what other questions, comments do we have? Did that answer your question, Cameron? I hope. Okay. Many, many more, Joey. Many, many more. I hope you're still in the group at 87. That would be a blast. And me still around at 70. We can take Geritol and Viagra between trades. All right, guys. Any other questions? Burning Desires going twice. Last chance. Lee, you've been relatively quiet. Anything you would like to add to any of our material today?
No.
Okay. That's concise. Any other questions or comments? Anybody? Thank you, Michael. I appreciate it. I really do. I will schedule part 2 of this. Just have to figure out where to put it. Oh, and I want to just emphasize before we wrap up, everybody, our next victim, please thank and welcome for the next live trading session next Thursday. We have David Tomas. He will be doing a live tape read for us, giving us our David's view. He's one of our motleys from the workshop of 2019. He is also one of our youngest members, 21 years old. He is a union machinist, a CNC machine operator for an aircraft company contractor, and he's a fun guy and one of our favorite members. So I'm looking forward to that. And I will also be booking a couple of other people to do live reads. Felipe is next up. So that's exciting. Otherwise, things to be mindful of. Tomorrow we have Lee's next session, which is great. Why permashorts keep getting stopped out and how to catch falling knives. You want to be there for that one. And then graduation's on Monday for you boot campers. It's exciting. We get to welcome you into TRG and the chaos that is the TRG Slack with its, I don't know how many channels, 40 channels or 50 channels and whatever. And also the chaos that is the TRG full library, which just for fun, one more time, I will show you. You guys just, when you guys in the bootcamp get into TRG, you could spend the rest of your life just enjoying titles in our library. We now have 1,300 hours, I think, and there's hundreds of videos. Just the live ones. Let's look at that. So we do these ad hoc live meetings, right? And they don't all fit because there's so many of them. These are all live tape reads with Lee and myself, or just me and Amy, and so God, there's just so much opportunity to learn. So I'm excited you guys are going to be making the transition. Okay, Burning Desires, last chance. Any other questions? Thank you for all the positive feedback. I do appreciate it. I am battling a cold once again, which is no fun, so I'm going to wrap it up and go have some tea and sleep. So I will be quiet in the Slack the rest of the day, but I will get the second half of this scheduled. Thank you very much. Thank you, Donna. I appreciate that. Happy birthday once again. Maria, a couple of days ago. Joey, more power to you, my friend. 77. That is so friggin' cool. Thank you, Tony. Appreciate it. All right, guys, we're out of here. Be nimble. This is you are taking this class at the absolute best time in life with all the political and economic stuff going on. Just learn the damn Open 5A and you can trade for a living, and then you can figure out the rest of the stuff later. That's what I would do if I were you. We're done. See you later.